All right. Good afternoon, good evening, everyone. This is Mark. Welcome to another Greenbridge Investing Market Analysis. This is a live stream. Thank you for joining me. I'm running a little bit behind today as far as time. I usually do these things earlier. So again, thank you. So if you're new, this is how it works. Share your symbols now, or your stock symbols that you'd like to see. And once I complete my analysis, I will get to your charts. Okay, so since I'm running behind, let's just get right into this. Hey Christian, nice to see you. All right, so this is for educational purposes only. For investment advice, please consult a licensed investment advisor. Now, the first thing I want to begin with here is Bitcoin, because it's in a very interesting situation. And it's been very tempting to buy into because, we've been getting a lot of questions about it. And that's very understandable. But here's the thing. This box that I have up here, that right there is the reversal zone. Okay, that's reversal zone boundary. And that's a high probability location where a fake out can occur. So people don't realize this, especially people that have no experience. They buy the breakout, that's the obvious thing to do, but they're buying right into a very, very vulnerable area. Now, can price just continue higher and start pushing the mid 16s or 17? That's possible. That's definitely possible. But the reason why we stayed away from this trade and we continue to stay away is because not only the risk of retrace is very high, but the risk as far as where we'd have to put our stop for our particular strategy is very high. Now, if you're a day trader and you're nimble and you understand the risk and you want to buy into this because your goal is to make a couple hundred points, okay, that's within reason, because your risk at this point, you could put your stop at, the bottom here of this candle, 15, 4, and 450, something like that. Okay, and you're risking like 600 points. Hopefully you can get something like 600 points in the move higher. Otherwise, it's not worth the risk. Okay, even now. But if you took the trade earlier, which again, we chose to stay out of this. We didn't even share the idea on this pin bar break. It's more of a day trade mentality. And the thing is, with less experienced traders, they don't go into this with the day trade mentality. They just go into it with the I want to make money mentality. And that does not make you money. All right? Because the thing is, when you have that mentality, you have no regard for risk. You're just like, oh, well, if it goes my way, cool. If it doesn't go my way, well, hopefully it'll eventually go my way. But the thing is, this thing can pull back 2,000 points. And people don't want to look at that. Or maybe they're following someone that tells them, oh, it's going to 20K, don't worry about it, or something. But we don't look at it that way. All right, we want high probability. And this area is not high probability. Andrew wrote an article for TradingView, published yesterday, and he compared it to poker, this situation to poker. And I've also compared this situation to poker. If you know anything about poker, when you start out with the first betting round and the dealer hands you your cards, if you have garbage cards, okay, like a 2-5 or not even like a 2-8 unsuited, just complete garbage, the right thing to do is to throw the cards away, okay? You fold, because chances are nothing is going to come out favorable for you. But there'll be that one time where you throw them away and then something on the flop comes out where you could have won. Okay, so what that does is that reinforces the bad behavior. Oh, next time I'm just going to give it a try because it may come out. Low probability doesn't work over the long run, but the market is tricky because it will reward you randomly, just like a casino. So you have to be aware of that. Most new traders are not. They're not even aware that their own emotions are governing their decision making, which is why they are reactive. And being reactive will not get you anywhere. But like I said, with random rewards, it seems that, oh, okay, it worked this time, maybe it'll work again next time, right? Just like a slot machine. But that's not the way you want to go about this. You have to isolate the high probability. And that right now is this 13K, 13 and a half, 14, maybe even 14K, this area here. That's where the high probability is, okay, here in this area. So we have no choice but to wait, because if we're going to share an idea, we don't want to share a low probability idea. That's why our track record is so good, because we wait, and waiting is really what pays. So yeah, Bitcoin's strong, but we don't like low probability trades or high risk trades. Now, again, if you're looking at blog posts or you're looking at other people's stuff on Twitter or whatever, They're going to be getting all excited about this. You must avoid the hype. You must avoid all that talk and all that because it will give you a bias, for one, and it's ineffective in the long run. We look at levels first, and this is the level. So I've been talking about this for a while. I have to bring it up again because even though, we reiterate and reiterate, we still get questions. Oh, should I buy Bitcoin now? No. Okay, so just wanted to point that out. Even if it goes higher, I will not take this type of trade for a swing trade. All right, hey DJ, nice to see you. All right, so that's Bitcoin real quick. Again, I want to, if you have any questions about it, let me know. Also, if you have any stocks or markets you'd like to see, put them in the chat now. All right, I want to go over a couple other things. All right, next thing is the S&P. So the S&P 500, let's take a look. SPX USD, this is the CFD. Earlier today, it generated a sell signal. Now, why is this important? Because if you're in stocks, you need to know about this, okay? We were very hesitant in this location to begin with, especially after the pin bar appeared, but there was still no sell signal. Well, here it is. We took out yesterday's low. And these two candles, since that pin bar, which was earlier in the week, those are basically two inside bars, and we just took out the low of yesterday's bar, 35.35. Right now we're at, 35.36? So we took it out, and we're sort of trying to pop back up to retest it. But the thing is, we took it out, and we're closing in just 2 minutes here. So, okay, is this still count as a sell signal? Well, yes, it took out that low, even though it's trying to retrace a bit. So this is important again for stocks because yesterday and the day before, stocks were showing buy signals all over the place. And you need to know where your index is in those situations. Now, if the S&P was here when all those buy signals were showing up, then sure, they're longs. It won't hurt because the S&P is with you. But if the S&P is not with you, and the S&P is in a vulnerable area where it can sell off, then those long signals are likely to fail or they're likely to go away, after you get into them and then they oh, it went right to the stop. How come? These things suck. Well, no, the S&P wasn't with you. This thing needs to be with you, okay? Because this is a general gauge of all of a variety of sectors. And if money is flowing into all of them, this thing is going up, all right? Or if money is flowing into, I guess, the heavier weighted ones or whatever. You don't need to know all those details. What you need to know is you need the general market to be with you. Now, wherever the S&P goes, of course, the NASDAQ is going to go too. Now, the NASDAQ has been giving conflicting situation. Obviously, the NASDAQ is weighted by different stocks, right? You have Apple and Google and the FANG stocks and all that stuff. So we had a similar pin bar situation in a similar area like the S&P, but where it is now is not the same. So we saw the S&P was coming off that range high. The NASDAQ popped up off of the middle of its range and tried to basically give a buy signal. Now that's where a lot of the buy signals came from. If you were looking at stocks, I was looking at stocks like Roku yesterday and stocks, there were a couple of other ones too, CleanSpark and a bunch of them. And they were showing these buy signals. They kind of looked similar to this situation here. But if the S&P doesn't agree, then you have to give this a lot less weight. The NASDAQ can lead the market, but right now it's not leading the market. All right, I don't see, if the NASDAQ was leading the market, then the NASDAQ should have been higher than the S&P when the S&P pulled this move here. Okay, should have been higher. It's not higher. So the NASDAQ is acting relatively weak, which means once this thing sells off, the NASDAQ is probably going to follow. So again, important for tech stocks. There are these things called market stocks, stocks like AMD, stocks like Intel, stocks like Amazon, stocks like Apple. They basically are the market. They're a reflection of the NASDAQ. So if the NASDAQ's pulling back, those stocks are going to feel it, okay? Then you have stocks that are not so correlated, stocks like Nikola, stocks like Workhorse, and there's many of these little stocks that, are more sensitive to what's going on in their sector and their potential. The cannabis stocks, they a lot of times do their own thing because they're sensitive to news. So, the biopharma stocks, they're sensitive to their own news often. So there's always exceptions. But when you're looking at buy signals, you have to consider these things. So I want to point a few of these things out. Now, I wanted to send out this S&P signal as a swing trade. I may still send this out today for our members as a, for the CFD, if people are in the CFD. Otherwise, I mean, the only other choice you have really is the SPY, but that's closed now. But the CFD is still open, so that's a possibility. I'll think about that, or maybe I'll just wait till tomorrow, and see if maybe this thing will give us a better price. So we'll see. Okay, so that's the S&P. Now, are we going to get into the Qs? So DJ asks. All right, so basically, DJ, in this situation, I'd rather send out the trade in the S&P rather than the Qs because, again, that NASDAQ is mixed. NSX USD, it's mixed. And although this could, if the S&P sells off, this technically should go, the risk is higher in this because we're gonna put our stop on top of this candle right here. That's not even at the range high, which means this thing can still test the range high. And no need to get caught in that. I'd rather short the weaker market or the market with the clear sell signal. This thing doesn't have a sell signal. This is not a sell signal in the NASDAQ. So, often we usually do the IWM, which is the Russell, right? And is this thing acting relatively weak? No, this thing has changed. This thing has changed its tune in recent time. Usually we go after this thing, but as you can see, this thing has become relatively strong, okay? So not going to short that. So the S&P would really be the one to consider. And the CFD would probably be your best choice next to the SPY. I like the CFD. But anyway, so we'll consider that either for today or possibly tomorrow. But again, I point this out, not just to talk about the CFD, but to talk about stocks in general. Okay? Now, hey, Alice, good to see you. Joe, nice to see you too. All right, sure. We'll take a look at your stuff. All right, so those are the two main markets. Now, I want to talk about the euro real quick. All right, because this has been interesting. Andrew sent out a trade in the pound. I believe it was yesterday. I think it was yesterday. Short the pound. Now, typically the pound and the euro against the dollar, they typically follow each other. But we don't have that happening right now. This right here on the euro, as you can see, is an inside bar to go long. Now, the euro is not in the best location because, it'd be nicer if it was in the high 16s, right? It'd be nicer if we got that signal there. Also, we're in a sort of in the middle of a consolidation, right? That's the range high right there. So you sort of, the buy signal's appearing right in the middle of it. Not the best place, but it is a consideration. I mean, where would the stop go on something like this? 17.58, so around 17 and a quarter. So if you're buying this thing at like basically 18 and a quarter, you're risking 100 pips in hopes that it can break out of this consolidation, which if it can, then you're in good shape. But if it doesn't, then you're likely to test the low. So this is tricky. And the way Forex has been, I am hesitant to share such an idea. I'd rather wait for a better level. Because again, setups can appear randomly, where you want really more of the alignment of the level and the setup together. That's really what gives you the high probability. I mean, look back here. Nice touch of the level, nice push off the level, right? Not the best setup, but again, looking back, this was the week of the election here. And we were not about to get into this going into the election because it could have gone either way. We had the election, we had NFP, we had FOMC, all that week. So not the best time to be jumping into these Forex pairs. Okay, sure, I am going to talk about gold actually. So let's talk about that pound trade real quick, right? GBP USD. And look at this. So this is in the green right now. And this was taken actually based on, you had the level, okay, which was good. And you had a sell signal, it's not the ideal sell signal, but it was one, okay? Similar to like what's going on with the S&P right now. And it's basically off of a resistance. So it was somewhat aggressive, but hey, nice. Is this thing a weak market? Is the pound generally weak? No, the pound is not weak. The pound is not bearish. I mean, I see higher lows and higher highs all over the place. If anything, we can characterize the pound as range bound right now, and we're now short from the top of the range. It's unusual to see the euro and the pound moving not with each other. Okay, mixed market, kind of like the S&P and the NASDAQ. But again, when it comes to currencies, there are times when individual pieces of information that come out of a country can move that currency have it not correlate so much with its usual relationship, right? And that could be what's going on with the pound. That's why, and Andrew pointed this out earlier in the chat, that's why it's so important not to get caught up with fundamentals or logic, because those are actually biases that will a lot of times cause you to try to act in a rational way in an environment that's not rational. Okay, markets are not rational. They'll do things for whatever reason. There's a million reasons why this could be. Now, it's human nature to look for cause and effect. That's how we're trained. That's how we grow up. We think, well, if this, then that. So we also apply that to markets because why? Because we watch the news, and the news says, oh, today Apple had earnings, and the stock market's pushing new highs. So you think, oh, Apple had good earnings in the whole stock market. Okay, cause and effect. But that's just an illusion, and they use that to sell advertising. That's not the reality. And you need to understand that. When you and we start out in this, we have nothing to go by. We have no point of reference. If no one has trained us, what do we come to the markets with? We come to the markets with money. We come with a lot of biases, right? And we come with our conventional wisdom and human nature. That's all we come. That's what we come to the market with, not realizing we're going into a random environment where cause and effect don't really mean anything. So that's why it's important, and we always tell our members, focus on the levels first, and then the price action around the levels, especially the shorter the time frame that you're in. Swing trades are 2 days to 2 weeks. It's a pretty short time frame, relatively speaking, compared to an investment. Investments, require being aware of different information, not just technicals. But when it comes to short term, technicals carry all the weight, because it really doesn't matter why things do what they do, because we'll never know all the reasons. Another point that I want to make about that is keep something in mind, because I get questions about news all the time. And as you know, I'm very anti-news. Most of the time, I don't know what's going on in the news because I don't want the bias, number one. Number two, by the time you receive that news, whether you're watching it on TV, whether you're getting it from a blog, whether you're getting it from a fake guru, whoever you're getting it from, by the time you get that news is ancient. Even if that news came out an hour ago, was released publicly, it's ancient. Do you know why it's ancient? Because the insiders, or the people that got to that news way before you, have acted on that news way before you. But with the bias that we have, overestimation bias, we think, oh, well, I know what this means, and it means it's bearish for whatever, and blah, 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 so I'm going to do this. Meanwhile, you're reacting while the insider or a professional or whoever who's been in it is getting out, and they're getting out on you. All right, that's why news is pretty much, when it comes to actionable information, it's irrelevant, especially on smaller time frames. Okay, so let's move on to gold real quick, and then I'm going to go to your questions. Okay, so again, thanks everyone for asking questions. If you guys, if you guys have a chart or a market you'd like to see, just put it in the chat. I see a couple there we're going to look at. Also, so before I talk about gold, real quick, for those of you that are new or maybe watching this after, if you're new to Greenbridge, please make sure you subscribe to the channel. Also, if you like the video, please press the like button. It's encouraging for me. And if you can, please share with your friends if you find this video useful. Also, check out our website at greenbridgeinvesting.com. We have swing trade signals by text, by email. We have portfolio management ideas, and we have a chat room where most of these people here are in the chat. And that's where we update a lot of our ideas and share perspective. Alice wrote a very interesting thing earlier today in the chat. He was talking about, Alice and DJ, these people have been with us for a while, right? 2 years. And Alice was talking about how in the beginning, he would just throw money at something and basically hope for the best. But then after spending basically 2 years with us, his whole perspective has changed. So now he knows how to build into a position. He knows how to average in while having regard for risk, and that's why he's doing pretty well. He's been happy, right? I think what he said, he was up 50% in one of his accounts or something like that, Alice. So anyway, that's very nice to hear, and I'm glad you're able to get that perspective. I mean, he's in the chat room every day, and he goes to all my webinars. He comes to all my streams. I mean, the guy is committed, obviously, DJ too. So that's the value that you get. Anyway, so I just wanted to mention that. By the way, we have a 7-day free trial. Check it out. Our prices are going to go up. So if you get in before our price change, you lock in the prices we have now. And then just to let you know, our yearly package comes to $20 a month. So basically I'm working for free, okay? So you can get that price. You know, it's like $239 for the year or whatever. It's $20 a month. As Michael pointed out a few times, one trade pays for your whole year's subscription, you know, if you catch one of these things the right way, especially since we're very active in stocks. All right, so enough of that. Let's get into gold. Now, gold has been consolidating. Gold is tough. Gold, the CFD outright, you have to be careful with it because of the leverage, right? It's in a good location. I like gold long. I like it long in this location. I like this inside bar. The thing is, it's possible that, you know, this is very sensitive to news. If there's anything that comes out, you know, this thing may react a bit. The ideal level on gold is 1840, okay? Now, fundamentally, nothing has really changed yet. The Federal Reserve hasn't changed their policy yet. None of that has changed. So as long as the money printing is going on and as long as all the stimulus, blah, 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 gold has, you know, fundamental reasons to go higher. But again, like I said before, you can't trade, you can't take risk on that information, because what if you bought gold thinking, oh yeah, right, you know, gold's going to go to 2000 because I read it in some blog or whatever. And, you know, you're buying it here at 1950 and now the thing's 100 points against you. And you sit there and say, how can gold be against me? Well, all the fundamentals are in my favor. Doesn't matter. So as far as gold goes, I would consider putting on a small position in the CFD here, you know, like a micro lot, like something small. If it goes lower, I would consider, you know, an add if I can get the reversal. But at this moment, you have somewhat of an attractive location and you have an inside bar. What I hesitate about with gold, you know, price action wise, is we're still dealing with this bearish candle and we're not at the extreme low of the range. The highest probability in this situation is the extreme low, the failed low. Can gold deliver a failed low? I don't know. Okay, if it does, that's the best opportunity. Is there an opportunity here? Yeah, it's not, but it's not the best. Okay, so it depends on how aggressive you want to be. We are near a range low at least, but you're going to have to be able to take some pain if this thing fakes out again. The other thing to keep in mind is with gold, a lot of times, you know, if gold is in a good area to buy, you might want to consider gold stocks, right? Like, I mean, a lot of them have made a move. Look, this is Newmont Mining. You know, you get the higher low developing here. Again, not the best location. Maybe it can, if gold pulls back to 1840, perhaps you can get a better price. But the mining stocks are probably more, I should say, more stable relative to the CFD, right? Especially since you don't have to have as much leverage in play. Another one that is like GDX is another one that's the ETF. That's very similar to the gold position. Look at that, right? It's like almost it looks very similar to the gold CFD chart. So the advantage to using something like this is, again, you don't have to tie up, you don't have to worry about the leverage as much. Yeah, you're using leverage, but it's not as harsh, okay, as something like the CFD. Remember, CFDs could be 50 to 1 to up to 200 to 1. Depending on which broker you use and how much leverage you assign yourself. Where the stocks are pretty much fixed, right? Depending on how much money's in your account, but you don't even have to use it at all if you don't want to. You have a choice. Leverage is usually the problem with these things. So anyway, so I would consider, you know, if you're interested in gold, consider GDX. You know, it's a little more stable relative to that CFD. If the CFD pulls to 1840, you may get a double bottom on GDX. I think, look at the price. What's GDX right now? 37.49. So if it tests the low here, you're looking at 36 a dollar. That's nothing. That's, you know, come on. We took $6 of pain in Workhorse alone, right? So a dollar is like, that's easy. So just something to keep in mind. Nice consolidation too. Nice higher low, broad consolidation. You're buying a double bottom in that area if you can get there. That would probably be a test of 1840 on gold. Okay, so just a couple of different perspectives to keep in mind there. You have to decide. We may call something on this. I don't know. I've talked to Andrew. Anyway, so thanks for bringing that up. So let's get to what you guys want to see. All right, that's pretty much what I wanted to mention here. Okay, so let's get into this Fastly. DJ, I think DJ is one of the DJ and Alice, I think, are the only two people that appreciate my cheesy New Jersey humor. Okay, my bad jokes. I have lots of them, and I usually include them in my titles. So, Fastly is was trade of the week, and this one moves. Okay, this one moves, and you can see the order here. This is the order we emailed out. By the way, if you're a new member, if you're a free member of Greenbridge, you get the trade of the week. We send these out every week, every Tuesday or Wednesday, right? We choose them on our show. And this is the one that I sent out. So if you want to get that, make sure you signed up so that we can send you the email. All you have to do is sign up as a free member, and you're on the email list. Okay, everyone gets this. So the buy stop was at 73.50. Okay, look where we are today, 76.30. All right, nice. So that thing's favorable now. The target one is 83.50. Now again, I set these targets pretty wide because this thing moves. All right, when this thing moves, it moves. The other thing with Fastly is there's this gap over here. See this gap? So that gap is an attractive area. Typically, gaps can act as a support or resistance, or there's a tendency for the market to want to fill a gap. I mean, look back here. There was a gap, and it filled half the gap. Didn't fill the whole gap, but it tried, right? So even if this thing tries to do a similar thing, you're looking at the low 100s. So there's a lot of potential in this one, okay? Especially after it got beat up for whatever reason. We liked it because you had the higher low. So there's nothing to do with Fastly right now except let it ride. Okay, nice strong close today. Let it ride. Nothing to do here, but let the market do its job. Nice though. So thanks for bringing that one up, DJ. We'll see how it goes. Not all our swing trades work out this nice. Look, we had DocuSign the week before. This thing got stopped out. You could see the trade here. We had a buy limit at 205. Now I'm bringing this one up too because I want to say something about buy limits. So we sent this trade out back here. See this candle, this gap? I saw the gap and I said, well, I'm not going to send out this thing at the high of the gap. Why would I do that? So I said, we're going to put the order below the market. All right, and I put the order at 205.50. Obviously, the stop was too tight. The low, this thing went as low as 185.65, and our stop was at 193. This thing went a lot lower, right, to the range low. I mean, the stop, obviously, after the fact, should have been even lower, but that's a lot of risk. So here's what we're considering for these type of trades. Okay, because again, we're not going to put a breakout trade on something like this that gaps like this. So instead of putting an absolute buy limit order below the market, because it's risky, and we always talk about, if you read the email that I sent out, we talk about it could go straight to the stop, which can happen because there's no structure. You know, at that time, when it fills that order, there's nothing there. There's no point of reference. There's nothing there. There's no reversal. So you're just hoping. Basically, we're hoping that it holds, right, near the level. But so to improve that, what we're going to do with these type of trades, instead of an absolute buy limit below the market, we're going to put a buy range. So we'll say, okay, we're looking at a long, you know, between 205 and 193, for example. Okay, so we'll have like a range. And then we'll say in that range, doesn't mean you just step into it. In the range, you need to see a green candle or a reversal, something. We'll put something like that. And if you see that, then the trade, you know, is justifiable. Otherwise, you know, and if it goes through the buy range and keeps going, the trade is no longer in play. Okay, so at least the buy range will prevent you from taking the absolute limit order and all that risk, and at least waiting for some sort of structure to develop. Okay, so that's what we're going to do with those. You know, with our whether it's for members only or whether it's our trade of the week. Okay, I think a buy range would be appropriate for these type of situations. Okay, so that's Docu. Let me see what else we got here. Solo, sure. Joe, let's take a look. Solo. So this is one of those. Oh man, this is one of those electric car makers. Wow, I can't believe this thing. I was looking at this thing not too long ago when it was doing this, you know, this garbage price action back here and didn't do anything with it. Wow. Okay, so here's the thing. What's the price now? 483. Yeah, you can't. This is day traders. Believe me, day traders are all over this thing. Okay, it's a cheap stock. So you have day trader people. It pops up on their radar. and they're all over it, right? So you don't want to touch this thing right now. Also, look where it is. It's testing this previous high area right here. See this? Not a good place to be buying. Definitely not. Okay, this is where all the Robinhood people get interested in it because it pops up on their radars. Again, I make fun of Robinhood people, not because of a lack of intelligence, but it's usually a lack of experience, and they are reactive. Okay, they react to everything. And this is something that you would react to. Oh, it's going higher. It's probably going to go to 10. I should buy some. No, you don't buy things when they go vertical like this. If anything, if anything, this could have been a nice breakout trade. If we want to say, how could you have worked with this? Nice breakout right here off the higher low. Is that 389? Something like that. If anything, that would have been the place to do it, okay? To take a risk. Because then you could at least measure risk at 340. So you put your stop at like 3.25, if anything. But at this point, you can't touch it. Okay, leave it alone. The only thing you can do here is say, okay, well, where are the next support levels that I can look for in something like this? You have to look for the inflection points, and there's one right there. So you're looking at basically this, 3.25, something like that. And as you can see, it can do it, right? Because when things look great, and then it turns to garbage for months, right? And there's no need to sit in that, all right? So let this thing find a support, whether it's going to be this 390 area, which was a previous little resistance there, that's a possibility, or 3.25. Otherwise, don't chase this thing. Like I said before, there are these things called random rewards, and sometimes, you may buy something like this, and it may go up a couple of dollars, and you're like, oh, that was easy. So you just received the random reward, and it reinforced ineffective behavior. You keep trying stuff like that, you're going to get caught. Right? What about the people that bought into this candle here and had to sit in this thing for a few months if they didn't bang it out and watch this thing just go lower and lower for a few months? I mean, that's especially if you bought too much of it. So no need to get caught in that. Don't chase it. Wait for one of those levels. But thanks for bringing that one up. Nikola is also in that sector, right? Now, look, Nikola's been trying. Look at this. It's trying, but man, I'm waiting for Nikola to pull one of those solo moves. I want to see Nikola do that. All right, it hasn't done it yet, but that's what I'm waiting for. It has the potential to do it, right? What about Workhorse? Workhorse is trying, right? We're still in this position, trying on this one. Nice, okay. I guess Tesla is making a move, I'm guessing, right? No, wow, look at that. No move on Tesla. I figured Tesla would be leading, but it's not. So Tesla's just stuck in the middle of its range there. Nothing to do there. Okay, another one of these electric car companies is FUV. Look, that one's trying too, but again, you don't want to chase it at its range high. So I like that solo. Thanks for bringing that up. But like I said, you have to wait. Maybe something like Nikola will pick up. I think Neo is also in that space too. Look at Neo. But again, you can't touch that. We had a nice trade in that recently. Man, look at that thing. So thanks for bringing that one up. Okay, covered gold. Yeah, so Tesla, Benny. So let's go back to Tesla real quick. So in Tesla, we have a range, okay? This consolidation, it's basically a triangle consolidation. This broad, very broad range. These type of triangles that dates back to like basically about a month and a half, 2 months. These are typically trend continuation patterns, okay? It's just that, the trend is clearly bullish, right? I see nothing but higher lows and higher highs, but it needs to break out. And if it breaks out, you'll probably see another leg higher. But until it does that, buying right now, it's tough. You're buying in the middle of the range, especially for a swing trade. There's really no reason to buy right now. There's no buy signal there. Tried to give a pin bar, but this pin bar is not at an attractive location. Okay? An attractive location would be a range low, at least a double bottom situation, something like that, which is what, the 370s? That would be an attractive location, or somewhere around here, which is what, what is that, 330s? It's hard to believe that Tesla would test that, but it's possible, right? Those are the opportunities that you have to wait for if the market delivers them. If not, you're taking a lot more risk by buying it here. Now, if you're looking at it as an investment, as many do, then okay, pretty much you can buy these things at, I shouldn't say any price. You shouldn't be buying them in highs. You really shouldn't. But if you want to buy something that's in the middle of the range and you're looking to hold this thing for, a year or two or something, okay, the way to protect yourself or to manage risk in those situations is you start out very small. As Alice knows, you start out small. So you buy, a couple of shares or whatever, maybe 10 shares or 15 shares. And if it pulls back to these prices, you're going to add, you're going to buy more. Okay? But at least if it pulls back to them, you're not going to be a weak hand. That's where people run into problems. They get too big, they buy it all at one price. Oh, I'm going to buy 1,000 shares right here. Okay? And then it pulls back to a bad price, and now they're a weak hand. Now they're more likely to react and bang it out. And they're banging it out to someone who is waiting for those prices. So that's one thing to do. If you want to be involved in the stock, at least, you want to take a small bite. That's how you manage risk. You don't have to use a stop if you're taking a small bite. So a small bite obviously is going to be relative to your account size, but even if it's like 1 share or 2 shares, if it pulls back significantly, that shouldn't have you, worried too much. That's what I mean by small size. Okay. So anyway, that's Tesla. ARMK, DJ, let's take a look. ARMK, what's that? Okay. Oh, interesting. So here's one. Now, good example of a stock that was all excited. Everyone was excited about it. Here, had that gap and had pushed to these highs over here, right? See this? Had the gap, everyone's excited, and then it just turns to garbage trying to fill that gap. This is why we always say, don't chase. Just like solo, don't chase, because this is what you get caught in, typically. Maybe not this one time, but over time, this is what you usually get caught in. So this thing's trying to close the gap. No reason to buy this thing right now. I would wait for this level here if it wants to test it. That's the old resistance, which is likely to be a new support. Was that 30.5? So the first thing, like we tell our members, the first thing you want to wait for is the level, right? That's the first part of the trade opportunity. And then after that, you want to wait for a setup or some sort of pattern that tells you that there are buyers are entering. And then you want confirmation, right? And at that point, that's where, it takes out a high of some kind or whatever, and you can measure risk. So the level is here, right? Now, it doesn't mean that you may get, stability, you may get a pattern earlier. That's possible, but there's nothing there now. Like I said before, gaps can act as support or resistance, and here you've closed half that gap. So it's possible that support may come in, but no reason to step in front of it. So I'd wait on this one. I mean, general trend since that March low is I see higher lows and higher highs, taking out resistances. Okay. Hasn't taken out its March or February peak, but the recent structure is bullish. So I would work with the higher low. What you want to be careful of is if it starts taking out supports like this level here. Okay, 26.98. So if this thing starts pushing into the 26s, that's when the structure could be changing. That's when you want to be less aggressive, okay, and not plan to take a lot of pain on that one, or keep putting on more if it keeps going lower. All right, so good question on that one. AMC, okay, let's take a look. Again, if anyone has any other questions, let me know. Have any other stocks you'd like to see? So Kramer said Nikola's CEO is serious. Okay. So let's take a look at AMC. Oh, movie theaters. I guess that's what I'm looking at here. Contrarian trade. Well, so this is one of those stocks that people are going to be applying conventional wisdom to, because they're going to say, oh, well, movie theaters, people are going to go back to the movies and blah 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 and this and that. But yeah, I wouldn't be limited by that type of thinking. In this situation here, it's popped up, it's pulling back. Not too crazy about the general structure. Let's look at some levels, right? So we have a level here, right? That's a resistance. We have a level right here, right, which is also a resistance now, and we have a level here. Okay, which is obviously support. Those are pretty clear levels. And it touched this resistance and is now still attempting to sell off, right, and close that gap. So I would leave this thing alone right now. I mean, if you were thinking of long, I wouldn't, no reason to go long. If you're thinking short, well, the short, you're kind of chasing it at this point. So the opportunity would be to wait for this price. I mean, it's an inexpensive stock, which is nice. $2.12, that would be a good place to look for the buying to come back and possibly put on a trade. This may be a good cheap options trade. I don't know what the options are on this one, DJ, but something like this, maybe you look 6 months out, maybe a year out, and you put it somewhere near the range high. So like maybe what is this? Maybe the $5 call or $6 call 6 months out or a year out. If you can get that thing for, cheap, $1, maybe $2 or something, that might be worthwhile if this thing could pop back up. But again, I would put that position on when it's testing the level and giving some sort of buy signal, not now, because it can get cheaper. Okay. So, appreciate that, DJ. Thanks. We work very hard to, I mean, that was one of our goals, is to really instill confidence in our members so that they can have the perspective and they can make better judgments themselves, because we can't hold their hands all day. And we don't want them to be dependent. And it's nice when you can look at a chart and be like, oh, okay, this makes sense. And you can at least make reasonable assessments and have a perspective for risk, which is the main thing. Because if you can't manage risk, it doesn't matter if you can make money randomly. You're never going to make money. All right? Because it's all about risk. People don't, especially less experienced people, they're all about making money. I understand. But it really should be a focus on risk. Again, it's human nature to be chasing money. Right? That's just human nature. Okay. So Alice, how do you like Cisco? So let's take a look. Cisco, you're talking about CSCO, the tech stock. And so long term, let's look back here a bit. Now Cisco is typically a market stock. Okay, at least it used to be. Based on where the S&P is, I don't like where Cisco is. Okay. DJ is saying that AMC January 22 is 95 cents. That's cheap. Okay, that's a year's worth of time for less than $1. That's cheap. For the $5 call, it's because they're not expecting anything out of it. That's a good idea right there, DJ. Because if things turn back to normal by that time and AMC starts pushing, to $10 in 6 months, that call is going to be worth something. Okay, 95 cents. That's cheap. That's what I'm talking about. Okay. All right. So Cisco. Now take a look at this here. So going back, right? The first thing I want to see. This is going back a couple of years. I want to see support and resistance levels. Now notice how far back I'm going. Right, for something like this. People don't typically do this. What they do is they'll look at like a 30-minute chart and be like, oh, look, Cisco has a support here. It doesn't matter on a 30-minute chart unless you're day trading. So these long-term levels are going to be key inflection points. As you can see, right, those are some levels right there. And you can see, if you had put these levels, if you had put these reference points on your chart, 2 years ago, you could see how price action played out around those levels as the market went, as the market continued to move forward. So you have a support in this area here. Back in March, it went lower than that, but it looks like that support is your support now. If you're going to get involved in something like this, for one, I would, especially for long term, I mean, look, they're supposed to be the thing that runs the internet and all that stuff with their routers and blah, blah, blah. Like I remember this stock from years and years and years ago. So relative to the S&P right now, it's not performing that great. So if you're going to get involved, I would say at least get involved at prices where everyone is hating it. Okay. Meaning let this thing test its lows, because look, the S&P is starting to pull back a bit, and Cisco is not even up here, right? The S&P and the NASDAQ had, in August, those August highs were pretty impressive. Why wasn't Cisco following along with that, right? Why is Cisco here? It's relatively weak. just like, for the longest time, GE was in the garbage can, right? No one liked it. And the market was doing great, and that thing was just not going anywhere. So this could be one of those situations. It's not a bad company. They'd probably even pay a dividend, I would imagine. But I would get involved. I would start accumulating in something like this, for long term. You're talking years now at hated prices. These are hated prices here. So what is that? The 32, low 30s, or if it can test lower. If that S&P pulls back, this thing will probably break that March low. Those are where you want to accumulate. Not here. There's no reason to do it here. You're near a high, you're near a resistance, and the S&P just gave us a sell signal. So if the S&P sells off, this is going to follow. Obviously, it's a market stock. So just something to keep in mind. So let's see. DJ is saying, are you talking about Cisco? This stock is hated. I tried options on this a few months ago. Okay. Yeah. So, but the thing is, with something like this, you really need long term. You really need, so now 59 cents for the $60 call. $60, that's a lot for Cisco. $60. I mean, this thing hasn't seen, look, Cisco hasn't been to even $50 for the longest time. Let's just go back. When was it at $60? Look over here. $58 back in May of 2019. So, you need probably 2 years on something. This thing it'll take forever to get there. So you need a lot of time. And unless things start to change and news starts coming out, whatever, and this thing starts moving, but this is a very slow mover. So I wouldn't buy so far out of the money on something like this. Definitely a lot of time, but closer, something more reasonable. Maybe $40, okay, or $45, something like that's a little more reasonable. That's a range high of more recent time. But I would wait. When I say hated, like a hated stock, I mean a stock that's pushing its lows, okay, that people just hate, like CGC used to be. So at least test the low, this double bottom area. That's where I at least begin, 36, 31, and into those low 30s. That's where it's hated. Even lower, that's even where it's more hated. All right. So again, if the market sells off, let's compare this to the S&P real quick. Right. That's what you should be doing with these. Look at the S&P. Look where the S&P is. So if the S&P is testing its range low, is Cisco going to be in the low 30s? Technically, it should be. It's relatively weak. What if S&P tests this 3,000 area, right? 3050 or something. That's where you're going to get your hated Cisco prices. So let the S&P help you with that. Okay. Look where the S&P is now, and Cisco is a market stock. So just something to keep in mind there. All right. Yeah. So, and I like the long-term options ideas like that. It's just I would look for a better strike price. Alice, I'm still on Cisco from our portfolio ad. We'll add lower prices. Yeah. Okay. And at least if they're paying you to hold the stock. Okay. Fine. Okay. But that's, if you're going to play that game with it, I'd rather play that game at hated prices, or, like the other thing, especially if they're paying a dividend, if you just put a little money aside each month, no matter where the price is, whatever you want to invest, $100, whatever, let's just say whatever it is. And each month you just take that $100 and you buy a few shares of Cisco, or whatever. As you know, over time, that's going to build up and you're going to have a generally average price. It's not, Cisco is not a garbage company. So at some point it'll come back. Okay. But I'm just saying, if you want to be a little more aggressive with your accumulation, I'd wait for those hated prices. So let's talk about like CGC real quick, right? Because talk about hated stock. I was hating this stock, okay, for a while. And you could see why, right? Well, not too long ago, this thing was at like $40 or even higher. And it went to $7 this year. $7, all right? And I was not too happy with this stock at $7. Since then, it went to $24. But as you could see, all this time, this thing has been very difficult. Only recently, because of all this, stuff going on with the election and laws changing about cannabis and blah, blah, blah. Now it's starting to get, back into play. But you don't want to chase this thing, because when it sucks, right? Wait for better prices. I just bring it up because this is one of those hated sectors that was loved temporarily, right? Look, Kronos is another one, right? These things get all excited, everyone jumps in, right? Everyone gets all excited about it, and it turns to garbage. Here's something, a little quick story about the options, DJ. Remember I told you they filled me in that $6 call option? Well, this thing right now is over $6, right? Over $6. And my call option is slightly less than break even. So if I was short the stock, this thing would be $1 against me. Okay, but because I'm short the option and I shorted time, there's time value in there, the stock is still against me $1, but I can close the position for slightly better than break even, right? The only options can give you that kind of flexibility. Okay, so just wanted to point something out there. So let's see, AMC options, interesting. Yeah, we'll talk more about that one because, again, that's nice. I like those really, really cheap options with a lot of time, okay? Because things change and no one sees it coming and you get those options for nothing. And I mean, imagine like you buy, 10 or 15 contracts or more, right? And you get them for next to nothing. Look, like NYCB. Did you see this thing the other day, DJ? I saw this pop. I'm like, oh, this thing's going to go to 12. And then it kind of gave it back. But this is one of those where the options are pretty much worthless, 6 months out or 3 months out. And, you can buy a ton of them for like 5 cents, right? We're talking like $12 calls. I wouldn't do that if I were you. But the thing is, it's a gamble. If this thing pops up there and things can change in a month or two, those options will be worth something, right? So you pay 5 cents for them and you get out for 50 cents. What's wrong with that? But anyway, that's a gamble. There's nothing high probability about that trade. All right, so let's take a look at Dell. DJ, you want to see Dell? So let's see. Now Dell, this thing. Let's take a look at the levels. So I see now. Look, this thing. Look where this thing is relative to its March peak, right? This thing is obviously more in line with the S&P. Dell was always a market stock, at least it used to be. I know they changed things since then, but here's the thing. So right now, you had this nice push, this recent push, but you have this attempt at a lower high. Not a good place to be buying, right? Especially since it's near this resistance level right here. That's 67.25 basically, this area, and it's trying to turn, right? It's trying to turn along with the S&P that gave us a sell signal. So I wouldn't buy Dell right now, and I wouldn't short this thing either because, I mean, look, this is a strong stock, right? Generally strong, nice higher lows, nice higher highs. Just because it's a lower high doesn't mean the trend is going to reverse, right? It has a lot of proof that it needs to show us before we can say something like that. And anyway, I'd rather short the Qs, right? Or I'd rather... Okay, I should be back. Okay, guys. All right, I think I'm back on now. Oh, am I? No, I'm not. Okay, I keep going on and off, you guys. So I'm just going to try to get through this and wrap this up. All right, so real quick, Dell. Like just going back, I'd start the count. I would start the count in this type of... All right, I think I'm back now. All right, so yeah, again, look, so let's see, let me just see if this, right? So that box right there is the wave 2 on the Elliott wave. And then, you have your wave 3 here. Wave 4, you have like another actually, no, wave 3, this is this entire structure up to this high. And now you're in the wave 4, okay? Okay. Yeah, this thing keeps going in and out. So I'm just going to